looking at the market, Tim, it's easy to get, emotional about the marketplace, right? When you're looking at all these candles and you're looking at the price action and the daily movement in the price action, yes, it is very, very easy just to get emotional about it. But if you just take it and look at it like a technician, like our brother Mark would, or the great trader Jesse Livermore from many years ago, if you're just looking at it from an overall trend perspective, and you see this type of environment here, right? If that's all you see, and then it starts to slow down at that level, what would you say? What would your bias be if that's all you saw?
It's bearish. That's why I
It's
still have a
bearish,
bearish bias.
right?
Yeah.
It's bearish. You don't have to make this complicated by getting into the emotional arguments of Twitter finance, right? You don't have to get emotional the same way that people that are watching CNBC or Reuters or Bloomberg or whatever it is does. You don't have to get caught up into the day-to-day of what's driving the market today, even though that's what we do in the halftime report every day. But if you just look at this purely from a price level perspective, you're looking at a bearish downtrend. When you focus on the weekly chart and you're looking at this from a weekly chart, that's a bearish downtrend. That's a retracement. Now, it is not confirmed, right? It is not confirmed, but at the same time, it's not difficult to say that we're still in a short-term bearish downtrend. Now, are you at a precipice in this trend that could change? Absolutely, 100%. I mean, look what's happening with crude, Tim. I said for 2 weeks, I'm waiting for it to hit 50. I'm waiting for it to hit 50. I'm waiting for it to hit 50. And if I would have got a slowing momentum and a downward movement in price, I would have shorted it at 50. But that's not what we got. And it went back up above 50. And now you got to be able to modify your projection. You have to be able to come off that downtrend and the emotion of that downtrend and say, well, now we don't have pivot lows and pivot highs in crude oil anymore. We have now a neutral formation happening. We have potential reversal formations happening in crude. And now I'm not really looking to short crude. Even if it goes back under 50, I'm not looking to short crude. In fact, I'm looking to do more naked puts here because the trend and the pattern is in fact changing here. But until that S&P 500 gets back up above 2,600, I'm still bearish. But if we do close above 2,600, will I go back into a neutral bias in the market? Absolutely, 100%. And it's not the futures market testing above or below, guys. Look at this on the ETF. If you close above 260 on the spiders, that's the same thing as a close above 2,600 on the actual index, the ES contract. If you look at it on the index, you can see that very clearly at 2,600. If you close above 2,600, I think you got to go back into some degree of neutrality. But until that happens, I'm going to be bearish. Now, does that mean I was shorting here and shorting here and short? No. After I got faked out right here, Tim, I'm patient. I'm a patient trader. Wait for it to set up, wait for it to trigger on the downside, wait till you get confirmation. And on the same thing on the S&P 500, it's not the test of the futures market underneath the low, Tim. For confirmation to actually happen, it's the close. The index, the ETF has to close underneath that level. It can't just be a test. So if we get some negative reaction, and Jerome Powell's literally going to start speaking right now, if we get some negative reaction to Jerome Powell's speech and we close underneath yesterday's low, that would be confirmation for me, and thus I would go look at potentially shorting stocks in the market today. But we still got a long way to go between now and then.